Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. While we love making money with real estate, we love even more not having to pay out a bunch of it in taxes. If you do it right, real estate is one of the most tax-advantaged investments there is. So what's new and what's changing? That's what we'll find out today. And we've got an awesome guest on the Real Estate Guys radio program. All aboard! Registration is open for the Real Estate Guys 22nd Annual Investor Summit. Imagine spending more than a week with like-minded investors, world-class educators, and real-world professionals. Returning in 2024 is the editor of the Gold newsletter, Brian London, real estate developer Beth Clifford, and the rebel capitalist George Gammon. Back with us in 2024, sales legend and best-selling author Tom Hopkins. And joining us live and in person for his 12th Investor Summit, Ken McElroy. Plus 2 brand new faculty members we can't even mention yet, and a lot more. It all begins June 13th in Fort Lauderdale, Florida. Visit investorsummitatc.com to get all the details and reserve your spot. This transformational week is like no conference you've ever attended. Go to investorsummitatc.com and make plans to spend a week with the Real Estate Guys, Ken McElroy, Tom Hopkins, and an all-star faculty on the 22nd Annual Investor Summit at Sea. Welcome to the Real Estate Guys radio show. I'm your host, Robert Helms. On this show, we concentrate on all kinds of ways to make money and keep money in real estate because it is a proven vehicle for those two things. Most wealth in the world is either made or once it's made, it's held in real estate. And all over the world, taxpayers are given incentives to invest in things like real estate. And you'd be crazy not to take advantage of those. Now, for years on this show, we've said you never let the tax tail wag the investment dog. You don't invest in something just because of its tax treatment. Because the thing about tax law is it can and does change. But for real estate investors, it's super important that we pay attention because some of the very best tax deductions available are for real estate investors. Now, when you're starting out, you're not that concerned about paying tax. You want to get some real estate and you want to get the cash flow going and appreciation started and all that stuff. As you continue to build your portfolio, a little tax planning can go a long way. Our guest today is a certified public accountant. He's been doing that job for many, many years, but I think the thing that sets him apart from many tax professionals is that he's really not a left-brain guy. He's a right-brain guy, meaning that he's a lot more creative and enthusiastic and excited about the fact that you can save money with proper planning and education when it comes to tax. In fact, he's taught me that very little of the U.S. tax code has to do with collecting of tax and how you're taxed. That's just a few pages. The vast majority of the tax law are deductions, incentives that the government gives us to do things that they'd like to see us do. And that's not just in the U.S. That's in almost every country. With listeners in over 190 countries, we recognize that not every tax system is the same, but a lot of the spirit of tax is. If you're not going to do much to contribute to the initiatives and agendas of your government, then you're not typically going to see too many tax deductions. On the other hand, if you do things like create jobs, build infrastructure, provide housing, then the taxing authority will roll out the red carpet. So today on the program, we're going to focus on not making money, but preserving it. And when we come back, you'll meet best-selling author and certified public accountant, Tom Wheelwright, back on the Real Estate Guys radio program.
Hey everybody, it's Ken McElroy and I'm on with the Real Estate Guys and I'm very excited to be a guest and a speaker at the Investor Summit coming up. If you haven't signed up, be sure to do so.
Welcome back to the Real Estate Guys radio program, now in our 28th year of broadcast. It's the time of year when taxes are on our mind. You've either just filed your return or your extension, and why it is on your mind, there's a lot to think about, some changes going on, and to help us get through and navigate all that, let's say hello to our favorite CPA. It's best-selling author Tom Wheelwright. Hey, Tom.
Hey, Robert. It's always good to be back on your show.
Yes, it's always good to have you, and you make taxes fun and enthusiastic. That's the cool thing.
Hey, I don't know what's not fun about a refund. So taxes are always good.
So, we've gone through this interesting couple of years, and there have been some tax changes. And every year, really, there are some changes. You see bigger changes when there's a change in administration, at least in the U.S. But we have listeners in over 190 countries, and there's pretty much tax in every country. But when there are changes, it's important that investors understand that. So what are some of the big things that you see either have recently changed that we've had to worry about or maybe coming down the road?
Well, we've got both. The most recent change is the starting to phase out of bonus depreciation in the U.S.
Yeah.
in 2022. And before we were at 100% bonus depreciation, 2023, 80%, 2024, 60%, next year, 40%, 20%, it goes to zero.
Yeah.
That actually brings up the rest of the changes because remember, the bonus depreciation came from the 2017 tax law, and most of that law phases out either the end of next year or the year after. So changes are coming down the road, regardless of administration changes, just how those changes happen depend on the administration change.
And I know you sometimes get a glimpse into what may be happening, and it doesn't always turn out exactly that way because new taxes and new tax law is a constantly moving platform.
Yeah, it is. But what's interesting, Robert, is that the people who actually write the law are not the people in Congress, right? They're the staff of the people in Congress.
Yep.
And the primary staff that writes laws in the U.S. is called the staff of the Joint Committee on Taxation. And this is a joint committee between the Senate Finance Committee and the House Ways and Means Committee. So you have the Senate, the House, their tax people, that's the joint committee, and it's their staff, it's their attorneys and accountants who are actually drafting the law. Well, the staff of the joint committee actually maintains a list of revenue raisers and revenue losers. As things change, an item might move up or down that list. I'll give you a perfect example. 2017, we lost the deduction for state and local taxes. That was on the list back when I was in Washington in 1986. So that's how long that has been on the list. The deduction for medical insurance, that's actually at the top of the list because the biggest revenue raiser would be to not allow a deduction for the medical insurance, or in other words, make it taxable to the employees. So there's lots of things on there. The things that have been on there, they're going to come back. So there's some people in Congress that say, let's get rid of that $10,000 of state and local tax deduction. They want to get rid of it completely. They're probably right to get rid of it because there's no real justification for it. But then on the other hand, you've got people in New York and California saying, no, we want to increase the state and local tax deduction. So this is the negotiation that goes on in Congress and frankly, with the lobbyists. Right now, we actually have a tax bill in Congress. I don't know if you knew that, Robert, that is a real estate tax bill that would give us bonus depreciation at 100% starting last year all the way through next year. And it's stuck. It's probably not going to be passed. At this point, it is on its last legs because for whatever reason, while the House passed it almost unanimously, the Senate hasn't even taken it up. They're not interested for whatever reason. So the Senate is like fighting over this, where the House it was bipartisan by a large margin, very few voting against it. I think 47 out of 500 voted against it. It's an interesting bill. It would be nice to have that bonus depreciation back. Would be some nice refunds for real estate investors, frankly, for 2023. Probably not going to happen. So more likely what's going to happen is we're going to see all that negotiated next year, depending on who's in Congress. But remember, even if we have a split, let's say the Democrats have the House and the Republicans have the Senate, which is kind of, I think, the likely scenario right now. Well, then there's a negotiation. There has to be a negotiation because otherwise what happens is the 2017 tax laws just disappear. They go off the books. So we get back to 100% deduction for state and local taxes. We get back to a 39.6% tax rate. We get no bonus depreciation. We actually lose the qualified business income deduction, the 20% deduction. So a lot of things change. Interestingly, the one that was permanent was the corporate tax rate. So that one is stuck at 21% unless they affirmatively change it.
Well, this is great insight, Tom, to see a little bit about how the sausage is made, because as you often talk about, the tax code is a series of incentives. And the reason the United States government or any government would give incentives to taxpayers is so that they do something that the government finds favor in. Like in real estate, we provide clean, safe, affordable housing. The government doesn't want to do that. They probably wouldn't be very good at it, but they encourage private investors to do that through some of these vehicles, like the bonus depreciation, which has been huge. But the part that you mentioned is fascinating to me, that they look and they say, okay, of those things that we implemented, what brought more revenue in and what didn't? So like we had an idea that this would give incentive to people, but here's what's actually happened. And then they make adjustments.
Well, and then you have to look at the current economy too. So certainly a lot of housing has been built. A lot of new apartment complexes have been built, and the 2017 Act stimulated that activity, right?
Yeah.
Now the question is, well, do we need to keep incentivizing that? So one of the benefits they have of making these temporary tax law changes is they can say, okay, we need this for a period of years, but do we need it forever? And they can come back and re-examine that. So I think they'll look at the economy next year. They'll look at the housing situation next year. I think there's still a housing shortage from what I can tell, because rents are still high. If there wasn't a housing shortage, rents would start to come down, supply and demand, right? So we'll see. That, I think that's a very interesting conversation. What's really interesting is what would happen if either the Democrats or the Republicans sweep the House, the Senate, and the presidency, because in that case, you have about a $7 trillion swing between the $2 trillion of tax cuts that the Republicans want and the $5 trillion of tax increases that the Democrats want. And what's more is, this is the first time in my memory. Now, I only go back like 60 years. So What do I know? But this is the first time in my memory that a president has run for a second term on a platform of higher taxes, thinking that that's a winner. And I'm just going, that's so interesting. What a far cry from the old days of George H.W. when he said, read my lips, no new taxes.
Read my lips. Yeah. Well, I guess it depends on which side you're on. If you're a person that is going to be the beneficiary of all these people paying taxes to fund the programs that matter to you, that'll be different than your capitalist who's putting money to work. The thing you point out is it doesn't really matter, because our opinion is our opinion. What happens is the law we have to follow. And this is why we want to keep up to date with what's happening. And I think it is helpful to see what may be coming down the road, even though it's not necessarily going to get there, because it just helps us, kind of understand the minds of these folks and where they're at.
And we actually have a really clear idea, Robert, of what the Republicans and the Democrats would do, because the Republicans did it in 2017. Presumably they like what they did, right? So they want to do more of it. The Democrats, President Biden issues what we call the Green Book, which is an explanation of his budget proposals on taxes. And he's issued that every year. Now, not every president has done that. I don't remember Trump doing that, but Biden does that. Well, so we know what those proposals are. So they include things like eliminating the 1031 exchange. They include things like eliminating oil and gas intangible drilling costs tax deductions. They include things like increasing the state estate tax from basically a $13 million exclusion to a 92%, as high as a 92% tax rate. So we really do know what they're going to want to do. The only question is whether they're going to be able to do it.
Yeah. Now let's talk about the estate side a little bit, because that was a program that was started some time back and the numbers changed every year. So, we used to joke that you better plan exactly when you're going to die so you can get the most benefit. But where does that sit now?
Well, so it's actually really favorable, but that's another one that by the way, phases out.
Yeah.
It was increased, basically doubled. The exclusion per person was doubled in 2017. That will go back. So it goes back to the pre-2017 if nothing's done, which means instead of a $13 million exclusion, it's probably closer to a $6 million exclusion. And there are a lot more people that are in between 6 million and 13 million that are actually over 13 million. So it's not a huge number, but it affects quite a few entrepreneurs, especially because if you think okay, having a business that's worth 10 million versus having a business that's worth 20 or 30 million, that's a big difference in what kind of business you have, right? There are a lot of people with that business that is $5 to $10 million. There are very few people with that business that's over $10 million. And so now you're looking at, okay, who does it affect most? It affects landowners, property owners, and business owners.
Yeah.
Right. So landowners being primarily, frankly, farmers. That's who it affects. That affects them tremendously because we've seen asset prices, as you've talked about, we've seen asset prices skyrocket over the last 10 years. And then it affects the business owners considerably. Like you said, the entrepreneurs. The good thing is that the tax law, they never eliminate incentives. They just change the incentives. And so that's where we can look and say, okay, well, you were telling me to invest in multifamily. Now you're telling me to invest in solar. Great. So I'll put solar on my multifamily. All right. So that's the kind of thing you just have to adapt to it. And that's where certainly good at financial education like you provide at the Real Estate Guys and what we do at Wealthability. But that's where the good financial education and then having a good team.
It's such an investment. If you'll take time like you are today, listening to a podcast, and you'll take time to read awesome books like Tom's and you get your brain around it and you engage some professionals, it takes work. But that work pays off. And it also keeps you just a little bit ahead of the game. That's for sure. Speaking of tax changes, I guess November we'll know what it looks like with more certainty. Between now and then, what are your thoughts? How do folks play when they are not sure which direction it's going to go?
Well, I think you have to prepare for the worst and hope for the best, right?
Yeah.
Preparing for the worst means, number one is get your estate in order. You may not be dying for 20 years, but in 20 years, your assets are going to go up in value a lot. So why not get them out of your estate now? The challenge is some people are going to wait and say, well, wait, I'll just wait till 2025, kind of see what happens. Well, the challenge is you actually do need team members to do this for you. You have to have an estate planning attorney. You need an accountant who understands how the numbers are going to work for you. They're not going to have time. They're going to be slammed.
Right.
I'm encouraging all of my clients, everybody I know, I'm saying, look, you don't have to sign your estate planning documents now, but you do have to prepare your estate planning documents. So spend a couple of $1,000s to prepare rather than spending millions of dollars if you're too late.
Well, and you may have a 20 or 30 or 40-year time horizon, but who knows, right? Every day we read about people who didn't plan to be done, and they were. So better to take that ounce of prevention. That's good stuff. Hey, speaking of tax changes, there's been so many that you have now revised for the third time your best-selling book, Tax-Free Wealth. The third edition is just out now. We were fortunate enough to have you at our syndication event, sold a whole bunch of those, mostly to people that had bought the first or second one. But tell us, I know a lot of people who listen have your book. Tell us what the meaningful changes are in the third edition, Tom.
Well, there's, of course, what we did was we incorporated everything that we had to add kind of quickly in the second edition, and we actually incorporated it into the body of the book. I love this. This is my favorite edition by far. The first edition was basically a first draft, right? Second edition, we're just kind of adding the information from the 2017 Tax Act. We got that out really quick.
Yeah.
But the third edition, we got the time to actually go through and incorporate the changes, think them through. Here's what happens, make it a little easier to read, give some more examples. Chapter 7, for example, the magic of depreciation, spent a lot of time on that, spent hours and hours and hours revising that chapter because so much has happened over the last few years on depreciation. And it really does have a big impact on people. And then you learn things. The other thing is what I love about teaching is I'm the one who's learning the most, right? I mean, you know this, you're a teacher.
Yep.
So when you teach, you learn new things. And I'm going, well, here are the issues that people are having. So we need to address these issues. And you don't know that when you first write a book. You learn that after you've written the book and you're talking to people and they have questions. You go, oh, I should address this. I should address this. I should address this. I should address this. I should make this more clear. And so I love this version of Tax-Free Wealth. Seems like we have to do a new edition every 5 years. So maybe 5 years from now, we'll yet do another edition. I don't know. But what I do know is I I think this is the easiest to read. I think it's got the most examples, the most clear. I'm very, very happy with how it came out.
So, we've got a bunch of young people in our tribe, and I always recommend one of the first books they should read is Tax-Free Wealth, because how do you set a target when you don't understand all the pieces? And the last thing you want to do is be unaware of tax. It's not designed to scare you away. To your point, real estate investors have a good position when it comes to tax. We get a lot of deductions. If we do it right, we don't pay too much in tax because we are doing things that the government is encouraging of. But you don't know what you don't know. And to me, like one of the chapters that I love in Tax-Free Wealth is the chapter where you talk about how do you hire a CPA, because they're not all created the same. We'll talk about that when we come back, and we'll give away a copy of one of Tom's books on real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me from July 19th to the 22nd in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 18 years now, and our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful. The people are wonderful, and wait till you taste the food. But the real opportunity is the real estate investment potential. There's all kinds of opportunity in Belize when it comes to real estate, including both long and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and contracts are in English. And in the top tourist market, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me July 19th to 22nd in Ambergris Caye, Belize, as we study the market, learn about the sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet lots of local providers that will help educate you about the market so that you can follow up with them after the trip if the market is interesting to you. You've heard about Belize on the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on Events, where you'll find the Belize Discovery Trip. Once you register, you'll get information about our group hotel rates as well as travel details. So join me in Belize, July 19th to 22nd. It's a beautiful country with lots of amazing possibilities, and the only thing missing is you. Go to realestateguysradio.com under Events, and I look forward to seeing you in beautiful Belize.
Hi, this is Kendra Todd, winner of The Apprentice, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Hey, come hang out with yours truly in beautiful Belize. We're headed back to Ambergris Caye to learn about the market, find out where the opportunity is, and hang around with some cool folks for the weekend. It happens in mid-July, and all you have to do is go to the website at realestateguysradio.com. Under the tab that says Events, and where it says Live and In-Person Events, you will find the Belize Discovery Trip. I would love to meet you and hang out in beautiful Belize. We're talking about how real estate can provide tax-free wealth. We've got CPA and best-selling author Tom Wheelwright with us. Before we get back to the interview with Tom, it's time to play real estate trivia, giving you a chance to win a prize by knowing today's trivia question, which has something to do with real estate and, as it would be, taxes. As soon as you hear the question and think you know the answer, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Give us your name, the answer to the question, and your mailing address, so that if you're the winner, we can send you an autographed copy of the third edition of Tax-Free Wealth by Tom Wheelwright. That can be yours if you know today's real estate trivia question. Last week on the program, we were talking about passive investing for busy folks, and we asked this: who is the city of Jacksonville, Florida, named after? Well, Jacksonville was named after General Andrew Jackson, the first military governor of the state. However, Jackson had never actually visited the city in his entire life. Here's our real estate trivia question for this week. Which U.S. state collected the most tax revenue in 2022? That's the most recent year we have the details for. Which U.S. state collected the most tax revenue back in 2022? If you think you know, or just want to take a guess, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Give us your name, your guess, your physical mailing address. Someone's going to get an autographed copy of the third edition of Tax-Free Wealth by CPA Tom Wheelwright. That's today's real estate trivia question. We're with the author of that fabulous book, Tax-Free Wealth, Mr. Tom Wheelwright. And Tom, the chapter we were talking about in the book about how to hire a CPA, I think that's worthy of some discussion. What happens a lot, and I know you see this, but we see it for sure, is that people weren't investing in real estate. They had a W-2 kind of job, and they had a simple way to prepare their taxes online or with a, retail tax person. And all of a sudden, they start to invest in real estate and maybe some private placements, and their whole tax look has changed, and perhaps they need to upgrade or change their CPA. Can you speak to that?
Yeah. So real estate especially is very much a specialty area in the tax law. There are certain code sections. I am always shocked by how little tax advisors know about real estate tax. I'm even shocked sometimes to see how little the attorneys who are arguing the cases in court know about it.
Right.
There's a case that I was reading not too long ago on basically Airbnb, short-term rentals. And I'm going, the attorneys didn't even address the real question here. I'm going, what's wrong with these attorneys? Why aren't you actually looking at the whole picture? And that's the challenge. The challenge is tax law is not A plus B plus C equals D. The tax law is like there's A, and then there's X over here, and then there's W over here, and then eventually you may end up at D. But maybe sometimes 2 plus 2 is 8. Sometimes it's 16. Right. So it's not always 4. And so you really do kind of have to look at the tax law as from a more holistic approach. And that's the challenge with CPAs, of course, and any tax advisor, is that they tend to be linear type thinkers.
Yep.
So really my job as the nonlinear thinker in the space is to actually translate it for the linear thinkers and actually give them a system to follow. So that's why we have a franchise where we have franchisees. I teach them and give them tools to actually do what comes naturally for me, because it doesn't always come naturally for them. And then they can look at it and be specialized. But we have, like our franchisees, I'll tell you, some are specialized in real estate. We have a franchisee that specializes in dental practices.
Wow. We
have franchisees who specialize in online retailing. Right? Others that might specialize in contracting or manufacturing. And of course, that's the advantage of a franchise, because you can have people specialize in different areas and still have owner operators. But I think that the question about how you find a good tax advisor, I think people make a mistake frequently, because what I always get is, and when I first wrote the book, Robert Kiyosaki, who asked me to write the book, he said, would you put in there a list of questions you should ask a CPA when you're interviewing them? I said, yes, I'm happy to do that. Is it okay with you if I also put in a list of questions that they should be asking you? Because I believe that the most important skill of a good tax advisor is very similar to the most important skill of your healthcare provider. And that is what questions they ask you. How do they diagnose your issue? Because if a doctor can't diagnose your problem, then you're going to take all these medications or you're going to go through surgeries and they're not going to help. You need somebody who's a really good diagnostician. The same is true with your tax professional. If you don't have a tax professional who can actually analyze your tax return, analyze your tax situation, analyze even your relationship with money and your relationship with your family, and what are your plans for your money? What are your plans for your family? If they can't do that kind of analysis, which all comes through asking good questions, how are they ever going to do a good job on you, on helping you know how to reduce your taxes?
Well, and I think that's seeing it from both sides. You know, I've always appreciated that you have taken your time to teach people about taxes, but what people may not understand is you probably spend just as much time training CPAs and enrolled agents and so forth about that side of the business. And the fact that you've got the franchise, which has changed since maybe the last time we had you on the show, when Wealthability was more of a training coaching business, to now actually having folks who are trained and certified by you, because it just takes that little extra effort. Back to the whole idea of getting educated. You know, some tax preparers, it's just, you know, how quickly can I get these returns done so I can get on to the next one. But when you take a longer approach, like I know you and your folks do, this client, if we do it right, is going to be with us a long time. How do we set them up for success and then continue to make sure that they're saving as much as they legally can?
Yeah, I tell people that I find with a lot of tax advisors and professionals in general, financial professionals, that they have this feeling that if I teach you what I know, you won't need me anymore. And I call it the black box theory of advisory services.
Yeah.
I've learned all this stuff. I spent 30 years learning it. If I tell you, you won't need me anymore. I have a different theory. And my theory is, well, if I teach you everything you need to know, you're educated, your life's probably going to get more complicated because you're going to set up new entities, you're going to do new things, which probably means that you're going to need more of my help, which means I'm going to make more money. So not altruistic in any way, shape, or form here. Okay. The fact is that literally when our clients are more successful, we're more successful because we can do more for them. And then the value is there for what we do for them. So I want our clients to be as successful as everything. I mean, we call it a client first mentality, that the clients come first. In our mind, the staff comes second and we come third. Better clients, better practice, better life. And it goes in that order. And if your CPA doesn't understand that, and if I could, Robert, can I talk a little bit, because you mentioned it, the difference between an EA and a CPA?
Yes, for sure.
I'm hearing a lot of confusion out there as I attend your seminars and other people's seminars. I had somebody come up in a seminar the other day and they said, "Hey, Tom, you'll be happy to know, I have somebody better than a CPA. I have an EA." I said, "Okay, so let me get this straight.
Let's break
You'd
this
rather
down.
have somebody with 5 weeks of training, an EA, than somebody with 5 years of training, a CPA." They go, "What?" I said, "Yeah, it's that big of a difference. It takes 5 years to get the education to become a CPA. It takes 5 weeks to get the education to become an EA. So what do you want?" You know, I think CPAs, I'm a big proponent of my profession, CPA profession, because I think that the CPA has a broader base of knowledge and a deeper set of knowledge. So it's broader and deeper. The EA is very targeted, and they tend to be very targeted towards tips and tricks. I call them the tips and tricks people, because they're looking for, okay, where are those loopholes? You know, what are those little tricks that I can do? And I'm going, well, that's fine. That'll get you so far. But if you really want to make a big impact, what you want is, you don't want just to be tax-free. You want to have tax-free wealth. So you want to be building your wealth, not just reducing taxes. And you want to reduce them just for now. You want to reduce them permanently. That's why the subtitle of tax-free wealth is how to permanently reduce your taxes to build massive amounts of wealth. Well, you want it permanent. You don't want it temporary. The tricks and tips are fine. You know, I mean, they're all in tax-free wealth. By the way, they're tax-free wealth. You want the tricks and tips. You don't need an EA. Go to tax-free wealth. That's where, by the way, that's where most EAs got their tricks and tips, is they read tax-free wealth. So they literally, I'll have people quote me tax-free wealth saying, "Hey, I heard this person on stage and they were talking about this and this." And I said, "Well, you should check out chapter such and such in tax-free wealth, because it actually explains it in there in great detail." So I think it's pretty hilarious that people are quoting me my book without realizing that that's what they're doing, but they're just getting it through an intermediary who's been on stage somewhere who read tax-free wealth. So I just think that there's more. If you take that long, like you said, take a little bit longer, spend a little more time with your CPA. I mean, your CPA, your tax advisor should be your best investment. They absolutely should be the best investment you ever make. You know, real estate's great. A good tax advisor will get you a far better return on your investment than any kind of real estate, no matter what kind of real estate you're doing, and with a lot less risk. frankly. As long as your CPA understands what they need to do, not just to reduce your taxes, but actually how to prevent or reduce your chances of an audit. Now you've got, almost risk-free reward. And who doesn't want that?
Yeah. Well, I'm glad you made that distinction. Let's take it even one level further, which is understanding the difference between a CPA and a tax attorney and when you might need one.
Yeah, I like that. So you need a tax attorney when you're in trouble. Okay. Generally, that's when you need an attorney anyway, unless you're doing a contract. Now, you also need a tax attorney when you're preparing your wills and your trusts and things like that. You do need a tax attorney for that. So think about the attorneys. They're the documentation people and the arguing people. And sometimes a lot of it's just arguing over their documentation. And so that's the two times when you're first preparing the documents and then when you're arguing those documents before the IRS, say in tax court, that's when you need a tax attorney. In between, it's all CPA. So just to be clear, don't be having your tax attorney. Don't expect them to prepare your tax return because most tax attorneys are not good at math. Math is not their specialty. They're good at language. CPAs, not really good at language, not known for our sparkling personalities. Not that tax attorneys are, but you need a tax attorney mostly, except when you're preparing documentation, you need a tax attorney if you get in trouble. You get an IRS audit, your CPA takes it through the audit process, and then there's some assessment. Okay, once the assessment is made, let's get the attorney going because that's what they're good at. So I always like specialists. And, a CPA is your specialist while you're making your money, while you're investing your money. They're your specialist. An attorney is your specialist when you're preparing documents or when you're arguing about that money. Let's use people in the right place. There is a place for an EA. If you are just starting out, and let's say that you're an Uber driver or you're just starting as an online business, something like that. EAs are great for that because you don't need that broad base of knowledge that a CPA comes with. So you don't need to pay CPA fees. You can pay enrolled agent fees. And why not? Use the person that you need at the time. But like you say, Robert, there will come a time, hopefully, if you're successful, when you need to upgrade into a better a more holistic approach. And that's when you're going to hire that CPA.
Well, and Tom, this is one of the things that real estate investors face. Maybe their tax guy or gal had done a great job when they owned a couple of rental houses. Now, all of a sudden, they're into bigger deals. They're looking at the advanced depreciation techniques. They're doing cost segregation, and their estate is getting bigger. And now it may be time to upgrade. One of the things I'm excited about Wealthability is now doing is taking a look at the tax return you just did with whoever you did it with, or if you did it online or whatever, and auditing that. So before you'd ever think about, the IRS auditing you, you guys go through and proactively compare somebody's tax return. Tell us about that process.
Yeah, we actually spent a lot of money developing software to do this. So we actually take your numbers from your tax return, we enter them into our software, and it actually produces a report and says, okay, here's what you could be doing. Now, the nice thing is we're not just going to tell you there's things you could be doing. We're actually going to tell you what those things are. That's the advantage of that true tax return analysis is, well, let's look at what are you missing? What could you do differently? And I always think it's an easy job. Now, I can do it in about 5 minutes. Personally, I don't need software to do it. I can look at your tax return. It's my stupid people trick. I can look at your tax return. I can tell you, well, you need to do this, 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 and this. And it's literally that fast for me. But that's 45 years of experience. Most CPAs don't have that kind of experience. They haven't been students of the tax law like I have. They haven't lived in Washington, D.C., been in the national tax office of a big four accounting firm, worked in a Fortune 1000 company, taught in a major business school. People don't have that same level of experience that I have. So I don't expect them to do that. So what we did was we took the knowledge I have and to replicate it rather than try to train everybody on it. We just put it into software and coded it. Algorithms, all those good things that software does for you. And you can actually produce that result. We've proven it over and over again. And then you get a real person on top of that to say, okay, so here's what we're seeing. Okay, what questions do you have about what we're seeing? And what do you think about that? And is it something that you'd want to do? a lot of times, one of the challenges that we run into, Robert, and this always shocks me, is that we'll tell people what they can do, and then they go, "Yeah, I don't want to do that." I'm going, "What? No, that's too hard. I don't want to keep track of my home office. That's too hard." I'm going, "You're leaving tens of thousands of dollars on the table not having a home office." Yeah, but then my kids can't watch TV in my office and it doesn't really work for me. And I'm going, okay, well, at least now you have a choice, because before you met with us, you had no choice. If you don't have the information, you have no choice. You're left with what education you have. So that's what I love about what you guys do, the real estate guys, is that you're always giving people so much education that now they have a new decision to make, and they have a new choice. Their choice is not, how much do I fund in my 401k this year, right? Because that's all they know. Now their choice is, do I fund my 401k or do I put the money into real estate? That's a choice that they can make. But until you have the education about real estate and you're comfortable, let's say you play the cash flow game, Robert and Kim Kiyosaki's game, the cash flow, and you played it a few times, you go, hey, this makes sense to me. Now I'm going to get some more education, say from the real estate guys. Maybe I'm going to get some good advice from Wealthability or from an attorney that does asset protection. You get this combination of this team. Then all of a sudden, okay, now I have real choices. Now I don't just have, how much do I fund my 401k?
And it's a great point that real estate investing, and really all business, is a team sport. It's really hard to be successful as a lone wolf sole proprietor if you're not engaging people that can collapse timeframes and time savings. And I know one of the things that just human nature is, it's this time of year, people have just submitted their taxes and they have that aching feeling like, did I really take every deduction I could? Did I really get the best tax person? Did I pay too much? And if you're making $80,000 a year, maybe not that big of a deal. But as you build up a real estate empire and as you have different and diverse kinds of investments, it's super important. And I love the fact that you developed the software, proprietary software that you use for this purpose, but then it also comes with an actual person who goes through the results. And here's the deal. It's like $500 to do. And the worst case is it comes back, thumbs up, you took every deduction you could, you don't need to make any changes, everything's good. To me, that's just peace of mind. But how often, Tom, and I realize this is something you've just started doing, but how often do you guys find something that would make a meaningful contribution to somebody's changing their tax return?
Well, so there are two things we could find, Robert. One is we could find an actual mistake. And I would say that's about 10% of the time that we find an actual mistake. I would say, on the other hand, 90% of the time, we find opportunities missed. So error of omission versus error of commission. They committed an error on your tax return. That's the 10%. The 90% is they didn't tell you to do something that you could have done. The fact you didn't do it prevents you from, you can't do things in the past, right? You can only do things in the future, right? You can't take actions in the past. We don't have time machines. We're not Michael J. Fox. We can't go back in time and change the way we behaved, but we can change our behavior in the future. And so that's, to me, that's where most of the value comes from, is not, okay, did I make a mistake, but did I miss an opportunity? And can I make that correction? And what I find is most of the corrections can be done very quickly. I mean, you're not talking about corrections that take months and months or years and years. You're not about corrections that take minutes and hours, maybe days, simple things. And I talk about some of them in Tax-Free Wealth, like, having a credit card for your business. I mean, just that. All of a sudden now you have much better documentation than if you used your personal card and then went and got a refund from your company, right? That filed an expense report. I mean, what a mess. But using a company credit card, way easier. So little things like that. I mean, the whole idea is, let's reduce your taxes while making your life easier, not while making it harder.
It's the wealth part of tax-free wealth. It's not just about paying less tax. It's about creating a wealthy lifestyle. So I love that. Well, hey, Tom, we are thrilled that you're coming back with us on the 22nd Annual Investors Summit at Sea. We're getting back on a boat, and you and your lovely wife are going to join us.
We are. I'm very excited about that. I'm bringing my better half. She is the better half in everything, not just some things, everything.
I won't argue with you there.
You know her. Anybody who knows my wife knows that she is by far the better half. I will tell you though, what I love about the cruise is we get a week together and lots of time to chat. And I love sitting and chatting with people, kind of walking through their situation, kind of helping them. I don't get to do that. I mean, I charge a lot of money to do that normally. And this is an opportunity. People come on a cruise and really just the time that we get to spend together probably will pay for their cruise. I mean, the amount of taxes they could save just by doing this analysis first, coming on the cruise, asking me questions. I mean, what if you get that report, you get that analysis and you go, well, I've still got some questions. Oh, well, I can ask Tom on the cruise because I'll have time. I mean, when I'm on a cruise, Robert, when I'm on your cruise, I am devoted to being present with your people. I don't go off and do my own thing. I am there every single day, full on, full out. And my goal is to really just educate and serve.
We love that. And we've seen that work time and time again for folks. So here's what we're going to do. Tom charges $497 to do this tax audit, a bargain, I think. And if you'd like to do that, we'll tell you how to do that in a minute. But what we're going to do is for anybody who signs up for the tax audit before the summit. So the summit begins on June 13th. You probably need a week ahead of that. We'll say June 1st. If you sign up by June 1st for the tax audit, two things will happen. Number one, you'll save $100. So instead of $497, it'll be $397. So whether you come on the summit or not, you can get the audit done, save $100. That's good news. But the even better news is if you join us on the Investor Summit and you have the audit done ahead of time, then Tom will absolutely schedule a one-on-one time for you to sit, you and your spouse, you and your business partner, whoever's tax audit it is, and sit with you and answer your questions and talk broader picture and all that kind of stuff. So that's an awesome, awesome offer. If you're interested, all you have to do is send an email to taxaudit@realestateguysradio.com, taxaudit@realestateguysradio.com. You get the information about what it takes to do the tax audit and how to pay your $397. You'll also get a link to sign up for the Investor Summit at Sea, and that way we will know that you need that consultation time with Tom. And the final thing is, we're going to go ahead and send you Chapter 7 of the updated version of Tax-Free Wealth, The Magic of Depreciation, one of the chapters that Tom has changed the most because of the changes in the tax law. You'll get that for free, kind of regardless. So if you'll send an email to taxaudit@realestateguysradio.com, you'll get that chapter of the book. You'll probably want to buy the rest of the book. You can sign up for the tax audit and just come join us on the 22nd Annual Investor Summit at Sea. Now, one other thing we do at the summit, as you know, Tom, is we hold some spots for young investors. If your age is 18 to 25, or you have someone in your life that's 18 to 25, we have a whole young investors program. It's amazing. This year, we've asked Tom if he would do an introduction to taxation to kind of take those folks who maybe haven't invested in anything yet and tee them up for the future.
Oh, absolutely. And I love that. This is one of my favorite parts of the cruise is sitting down with those young people and really getting them a head start. Because here's the thing. Once you start making money, it's too late to go back and get your taxes back. So every day you wait to learn about taxes is taxes you paid that you can never get back. And this is part of your life you can never get back. I was talking with Robert Kiyosaki this morning in our weekly meeting about why the rich are getting richer. Of course, Robert and I wrote a book together called Why the Rich Are Getting Richer.
Yes, you did.
And it really comes down to compounding, because it comes down to if you have $1 million and you double that, you have $2 million. But if you only have $5,000, you double that, you only have $10,000. So wouldn't you rather have $1 million? Well, where do you get that $1 million? Well, the easiest way is to not pay half of your money to the government.
Bingo.
Don't be paying the high taxes. Instead, have that money compounding for you on top of your money. And now you really get that ball rolling and things go faster, faster, and faster. And pretty soon you're one of the rich getting richer.
The effect of compounding is awesome. And the earlier you start, the better. Great stuff as always. Hey, Tom, you've also got another awesome book, The Win-Win Wealth Strategy. Those are 7 investments the government will pay you to make. Tell us quickly a couple of those.
Well, of course, the most important one is business. And that is true in every country. We actually went through 15 different countries and did charts and tables in the Win-Win Wealth strategy. I wanted to see, how does the U.S. compare to France, or how does the U.S. compare to South Africa or Australia or Japan, right? Where do we compare? And it turns out the business is by far the number one tax incentive. Number two is real estate.
Yeehaw.
So start with business, then real estate. There are a couple of other big ones, which include energy and agriculture. But the business and real estate are clearly 1 and 2. And what's really fun is when you get the business of real estate, which then you get combine them.
Love that. Well, here's a guy that can make tax fun, CPA Tom Wheelwright. Thanks, Tom, as always, for being on the show.
Thanks, Robert. Always good to be with you and your audience.
We'll see Tom and hopefully you on the 22nd Annual Investors Summit at Sea. More when we come back. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
The Real Estate Guys are throwing a party and you're invited. Join us at the New Orleans Investment Conference, November 20th to 23rd. Now in its 50th year, it's the nation's longest running investment conference and features some of the biggest names in economics and investing, including James Grant, George Gammon, Danielle DiMartino Booth, Rick Rule, Lynn Alden, and Doug Casey. Plus, I'll be speaking in multiple sessions, attending lots of others. And the Real Estate Guys are hosting our annual invitation-only party one of the evenings for our friends and listeners, including some VIPs for you to mingle with. So make plans today to join the Real Estate Guys at the 50th Annual New Orleans Investment Conference. With all that's going on in the world, no serious investor can afford to miss it. Send an email to neworleans@realestateguysradio.com and we'll get you all the details. And I'll see you there. As I speak, inflation is robbing you at a rate north of 10%. Last year, the number one zip code that Mid-South homebuyers offered income property to Real Estate Guys listeners in appreciated by 21%. To harness that spread and protect and grow your wealth in the current economic storm, you need the 2 decades of experience in renovation and management that Mid-South homebuyers brings to their investors. Every home Mid-South offers you will have brand new components, a new 30-year roof, and a high-quality renter, all in a price range under $150,000. Their empathetic property managers will use your ROI as their North Star, while the lack of repairs on their totally renovated properties contributes to their almost 4-year average renter stay and 99% occupancy rate. Learn about their lifetime occupancy guarantee and total 1-year maintenance guarantee by emailing midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com. You'll be glad you did.
Hi, this is Doug Casey, and you're listening to The Real Estate Guys.
And welcome back to the Real Estate Guys radio program. I'm so glad you've tuned into the show today. I'll be even happier when you join us on the 22nd Annual Investors Summit at Sea. I just got off the Empowered Investor Cruise with our good friend Jason Hartman. Jason will be joining us on the Investors Summit, along with George Gammon, Ken McElroy, Tommy Hopkins, Brian London, Peter Schiff, and Tom Wheelwright. There's just a few cabins left, but to get yours, send us an email to summit@realestateguysradio.com or just go to investorssummitatsea.com. Well, it's always good to hear from Tom Wheelwright. I just love his enthusiasm, his perspective, the fact that if you want to change your tax, you have to change your facts, and at the same time, pay attention to the changes in the tax rules. You know, it's one of the most interesting things. People think they can save money on their taxes by either just using a computer program or hiring the cheapest tax professional they can find. And that might be true when you're starting out. But eventually, as you grow and your portfolio grows, Tom said this, and I believe it, one of the best returns on investments you can make is to invest in a great tax professional. And I would even take it a step further. I don't want to just pick someone that has book smarts when it comes to taxation. I want to pick a tax professional that personally owns investment real estate, just like Tom Wheelwright does. There's something about head knowledge. I learned this, or I listened to a podcast, or I read a book, that is very different than time in the saddle, seat knowledge. When you've prepared your own taxes as a tax professional, and taken the real estate deductions and understood depreciation and all the things Tom talked about today. It's just one more level of understanding. So one of the questions I always ask, really any provider in the real estate space, is tell me about the real estate that you own. And if they say, oh, well, I don't really own any, then we just use a 4-letter word. Next. Find a tax practitioner that either has investment real estate or is trained by someone who is. Hey, speaking of saving tax, in a few weeks, we're going to hear from a gentleman that helps people save a ton of tax through an area of the tax code we haven't talked about but for a second today, and that's the tax-deferred exchange. It's been a long time since we've had a 1031 intermediary on the program, but that is coming up. And we've got a show coming up with one of my favorite real estate agents of all time. She spent her entire career just helping investors. She doesn't list or sell properties that people live in. She helps investors find properties in awesome markets. So excited about the upcoming shows. Hey, speaking of real estate markets, it's time for this week's edition of Market Spotlight. Ladies and gentlemen, it is time for Market Spotlight, where we take a look at real estate markets around the globe. And today, one of my favorite places on the planet, beautiful Belize. Let's say hello to David Kafka.
Good morning, everyone. Great to see you on your 200th trip here, right?
My 200th trip to Belize. It's crazy in 19 years and keeps getting better. Today, the market we're going to talk about is Placencia, Belize. So Placencia is a really unique, really awesome marketplace. You have lived and worked there a long time. Tell us what's going on in Placencia.
Yeah, it's a growing market. It's more of a boutique market. No brands or anything like that yet. I think I'm hearing rumbles of one coming, and it's doing great. You know, it's a 17-mile peninsula. So we have the Caribbean Ocean on one side, the Mayan Mountains on the other side. We are having a phenomenal, ever since COVID, we've had phenomenal increase in values. We've had one problem we are having is lack of inventory. Yeah. So things are staying on the market very little time. I just recently sold a lot on the canal. I used to could buy those lots for $55,000. Now I'm selling them for $120,000.
Wow.
In 5-6 years. And I'm not even getting them on the market. I'm just putting them out there. And then the agents are, bringing offers, full price and things like that. We have a new hospital that's finally done with construction, but it's not opened yet. So They're getting the equipment together and then getting the staffing requirements. But the building itself it's nice to see it's done. It's right by the airport. So if we have to fly people out, it's a great addition to the peninsula.
This is one of the really important stories because for folks that come in their later years thinking I might want to retire in Belize, whether they're from Canada or the U.S. or Mexico, healthcare is always a big issue. And it's been one of the answers there hasn't been a great solution for. So it's excellent to see that happening.
Yeah. And then, as you know, just right by Mahogany Bay Resort and Beach Club, a Curio by Hilton, we just did the groundbreaking for the one in San Pedro. So that is it's in between Victoria House and Mahogany Bay. So that's going to be great as well.
There is the occasional thing that happens when you're on vacation in a place that has, spear fishing and all that stuff going on, diving, right? There's a hyperbaric chamber, but you do want to just have that in the back of your mind. If something were to go wrong, I don't want to have to be airlifted out 800 miles. So that's good stuff. Now, Placencia is really charming. It's very laid back. It's also kind of seasonal. Can you speak to that?
Yeah, it's a little less seasonal now than it was, but we do have a lot of resorts that close August, September, October for, maybe a month or so. During those months, give their employees time to have a vacation. They do staff trips. They do a lot of needed maintenance. So we do see the tourism numbers that are down during those months for sure.
And, the other part of that is when there are resorts that are closing and restaurants that are closing, when you go to one that's open, it still feels pretty pretty busy. So it's not like it just closes up. I remember when I first started coming down, it was really seasonal, and you're right, less and less so. And part of that's just because if you can't come when you want because the hotels are sold out, well, maybe you'll adjust that a little bit. Now let's talk about, there's kind of two ways to invest in a residential outcome in Belize. You can buy something that already exists or buy from a developer that's building, or you can have a house built. I know you've dealt with both of those. Talk about the pros and cons of that.
Yeah, it's very interesting when people come to buy here. They kind of lose a little bit of common sense, and all too often I see people get taken advantage of. So what we do is when we sell you a lot, we don't just sell you a lot. We introduce you to the builders we recommend. And my team will take you to each of the 4 builders. You'll pick one that you like or 2 that you like and get a quote on it. And then we even have people that will project manage it for you, if you will.
Yeah.
And I recommend that. I definitely recommend you coming at least 2, 3, 4 times during the build, just so you can keep an eye on it. But majority of the builders we work with will send you pictures, will send you video. But it's definitely, they'll want as much as they can get up front. And I always try to tell people, we're doing a construction project at Mariposa right now, and he wanted 50% up front. I'm like, no, I'm not going to do that. I'll give you 5/20s, right? I'll give you 20% and we'll kind of do it that way.
Yeah.
So I try to make sure there's always enough skin in the game, so to speak, for the builder to finish. And so we've seen that, and it's been a lot less with the builders. But because of the demand, they're very busy. And so the prices are going up. So a lot of times you can buy something built already cheaper than you could build something new today. And then you have to wait the year and a half.
Well, this is an interesting thing that's happening in the market in that it is tight inventory, like it is in a lot of places, right? In the U.S., where it's somewhere around 500,000 or 600,000 homes for sale, which is a third of what we normally have. But at the same time, you have people that have ridden that wave of appreciation you talked about, and now they want out. So there are some opportunities. In fact, speaking of opportunities, we've got a Belize discovery trip coming up. You and I will be shepherding a bunch of people around Ambergris Key Market, and that is in July. We'd love to have you come and learn all kinds of stuff. There's no real estate for sale on our tour. David sells a lot of real estate. You'll get his contact information. He promises not to sell anything too early in the process, but when it is time, you certainly know your way around this place. You've been in Belize now for 14 years?
14 and a half.
Wow.
Yeah.
Good stuff. All right. Well, we appreciate the update. Thanks for being with us on Market Spotlight.
It's great to see you again.
There's David Kafka. You can meet him on the 22nd Annual Investor Summit at Sea. There's David Kafka from beautiful Belize. Hey, hang out with David and I on the upcoming Belize field trip, July 19th through 22nd, or sooner than that, on the 22nd Annual Investors Summit at Sea. You can get details on both those events by going to the website at realestateguysradio.com and clicking on the top where it says Events. Hey, big thanks to David for sharing his insight about Placencia, Belize, and to our good friend CPA Tom Wheelwright. If you'd like to take advantage of Tom's offer for the tax audit, all you have to do is send an email to taxaudit@realestateguysradio.com, taxaudit@realestateguysradio.com. Tax is not the enemy, as I think Tom has illustrated today. Tax can be your friend. And of all the ways you can make money, when you make money in real estate, you get some of the best tax advantages. Keep up the good work, and until next week, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.